Hey everyone, and welcome to another episode on the John Wick channel, and happy new year to everybody. Today we are starting off the new year with some new gains, and I'm really excited about it. So let's break down what we had to deal with yesterday. So if we look at the news that we had yesterday, we had unemployment claims, our first major news for the week and for the month of January. So I'm expecting some good movement. And so if we look at what we had on the charts, our price action, the first thing I looked at was what happened yesterday, as well as what is our bias for this week, for the day. And so if we look at the 4-hour, the weekly, and the daily, you can see on Nas and SMT we were bullish on the weekly. On the daily, from the daily onwards, we were pretty much bearish momentum going on here. And so what we're looking for sells. So that was my bias for yesterday. And we did not actually wait for my session. I actually took this trade a bit earlier than my usual session. That's just because I saw an opportunity and took it as soon as I saw it. And so let's see what happened. What I did was I marked out yesterday's high and low just to see what happened in terms of price action there. And that essentially became a buy side and sell side liquidity, as you will see. This was yesterday's low and high. And I'm going to mark that in this bright pink. We can see that price swept the low of yesterday on Nasdaq. Same thing here with S&P. We had the sweep of the lows yesterday. That was the first thing I noticed. We didn't displace, and so this was a liquidity sweep, and so we marked that out with a dashed line, and that now becomes our new sell side, unbroken. And so what happens once we swept sell side? We're heading to buy side, right? So what did price do? S&P went and swept the buy side immediately. We saw that price did not sweep the buy side on Nasdaq. We had a failure swing. So what that means is we have some SMT Divergence at the highs, which is a great confluence for sells. You see here when we have diverging price action, it's most likely that we'll form a reversal, right? That's something that I will teach later. And so this is our SMT. I'm waiting for breaker structure, our usual retracement entry, and boom, sell side. So I was waiting for that. Moving down to the 5-minute, I'm watching price action. Price action's moving. I'm looking for this breaker structure. We get it. It's hard to see, but we get a very small breaker structure. It was enough for me to add that to my confluence. You can see here when we made this SMT, we had this small little breaker structure. We disrespect this order block here. Can make that our little market structure shift over there. Not the best high probability market structure shift, but that's the one I chose to add to my confluence. So do the same thing here on S&P. And so what did price do after that? Price retraced. That wasn't a good enough retracement. I actually looked away from the charts at that point, but when I did, I saw this little turtle soup action, and that was enough confluence for me to start looking for sells. I haven't taught turtle soup yet, but you can think of it as another buy side, sell side liquidity happening right there, right? And so I was waiting for this high to get swept. It took out this high. Same thing happened here on S&P. We had a little sweep of this, a little bit of an accumulation. This high got swept, and so what we got a reaction off of that high and decided to push downwards. That's when I was looking for any sort of retracement entry. I was here on the 1 minute time frame. I was looking for any sort of 50% retracement into a PD array. So I saw that retracement happening after this little breaker structure. I waited some more, missed that first entry, but you could have entered on that. Waited on the second entry. We had a retracement close enough on the 50%. We did reach the 50% on the S&P here. That would have also been a nice entry, but I was focused on NASDAQ, and so we had this retracement entry into this fair value gap here. You can see this fair value gap, and so I entered off of this reaction of this fair value gap. You can see, and I put my stop loss right above this high. And so what was I targeting? I was targeting sell side liquidity resting here at these lows and at these lows. Why? Because that's our major swing lows. That's our sell side liquidity. And if we use our measuring tool, our standard deviation tool, from this leg that made the manipulation before we move down, we see that 2 standard deviations more or less lines up with this last leg right here. If you look on that 1 hour, I also noticed that we had a small little fair value gap there lined up there as well with this hourly lows, equal hourly lows. We have this fair value gap lined up there, but I was just interested in when we hit this this low right here. I was targeting around 2 standard deviations. If we look at S&P, we are more or less aligned at that same level there. We both hit 2 standard deviations overall. If we look at this, how this trade went, you can see that we hit our first target immediately and hit our second target loss, and that's when I decided to close. I can show you how the trade went on MetaTrader 5. This is how the trade went. If I just rewind, you can see I entered right there at that fair value gap. You can see on the 1 minute. Let's do a side by side. You can see I entered off that 1 minute fair value gap, and yeah, I pretty much just sat on my hands, waited for price to move. I saw price was just about to hit my take profit. I risked under 2% for this trade. It was about 1.13, I think, somewhere around there. I risked $1,300. A target. I ended up making $6,000 on this trade, which was great. You can see that as price was moving up, I decided to put my stop loss at break even. Why? Because we're hitting close to 4:30, and 4:30 we know is our time where we get some volatility, if not news. And luckily, it was in our favor. 4:30 we didn't do much, but right after that, price was selling, which went great along with our bias and our trade. And you can see those purple lines match up with where I put my targets. And once we reached that first line, I took my first partial. I think you can see somewhere there. I took my first partial there, and at the end, there you can see I took my first partial. It was a 5-lot trade, and I took off 3 lots, and at that last purple line is where I took my final take profit. You can see I moved my stop loss down as soon as I take my first partial, which is a good practice for trading. You want to lock in profits as soon as you feel that it you want to lock in your profits as soon as you can and as safely as you can. And so that's pretty much how the trade went. I think that was the perfect textbook trade, to be honest. I would have waited for my usual session, but I saw the opportunity when it arose, and so I took that. It went along with my bias. I didn't have to wait for this big move to take my sell, because that's what I was initially waiting for. This move within my session between these two blue lines, like you say, 4:30 to 5:30. But I was watching price way before, and this was honestly the best opportunity I could take. And yeah, hopefully we have good gains for the rest of this month as well. I'm hoping you guys have a good trading month and a good trading year, and see you guys in the next one.